US stocks they ended flat on Friday, recovering from moderate declines. Bargain hunters rushed in to buy stocks recently battered by disappointing results. Apple pulled back sharply from its session low after surprised analysts late Thursday with its weak margin outlook as well as its quarterly earnings. Investors had a muted reaction to US data showing a slightly better than expected pace of growth for the economy. The Q3 GDP has come in at 2%, confirmed that the recovery is going to be slow. The Dow edged up just about 4 points, the S&P 500 index a dash down, and the Nasdaq composite was up just about marginally. But is it a solace that the GDP has come in a little higher for the US equities?
Aisha, my understanding is that if I in isolation map the global cues, I guess currently the bulls and the bears, they have an equal say. So US economy is growing. It is growing at a run rate which is certainly higher than expectations. But on the flip side, Germany, which is a beacon of European hope, that seems to be slowing down. Look at risk indicators. The dollar index is above 80. Now that's scary, because if the dollar index stays above 80, you will see a lot of machine trade, a lot of algorithm trade could reverse. But even though the dollar index has gone above 80, none of the other emerging market currencies are really getting impacted in a big deal. So commodities are holding on and major emerging market currencies are still looking weak. I guess globally and locally we are in that frame of mind where there is good news and there is bad news, and no one is ready to commit too much of money. Either market men or money managers are waiting for the outcome of presidential election, or they are waiting for some fresh news development to emerge from Europe. If I map Indian markets in isolation, well, earnings have been good, earnings have been mixed. So private banks are performing, PSU banks are not performing, IT has been mixed, pharma has been okay, L&T numbers were decent, but ICICI Bank numbers, they came in with some amount of, with a big surprise. And this kind of confusion, I think, is getting captured in major averages as well, because major averages in last 2 or 3 weeks have not gone anywhere. But like we were discussing, given the way how things have improved from center, now that we have a new cabinet, oil sector as a new minister, power sector as a new minister, hopefully things will improve for Indian Railways because of a new minister. I'm reasonably confident that in the next 2 or 3 weeks we could see a breakout, and the breakout could be on the upside, because what has differentiated India so far is local news flow and government's intention and some symbolic reforms. If the incremental news flow from New Delhi improves because of the cabinet reshuffle, I'm reasonably confident that foreign institutional investors who have not invested a lot in the second half of October, they could make a comeback.